But I didn't, and the person that was my eyes and boots on the ground didn't see the glaring notice on the front door and tell me
Mhm.
about it. So I
Yeah.
just thought, hey, this is one's just falling through the cracks. We'll just take a swing at it. And we've had it rented since the end of 2018 till
Mhm.
now. But I recently, someone called me saying, we're fishing game. Do you know that there's people living in this house? And I'm like, you are not fishing game. You're an
Mhm.
asset manager. So I'm wondering if the gig's going to be up. We're just riding along on a 25% cash on cash return for as long as it lasts. We're going to go ahead and get started. So, welcome everyone. This is Don Rickabaugh. This is Property and Paper Live, where we talk about the dance between property and paper, where real estate and note of investing connect is seller financing. At least in my world, I don't deal in institutional paper. I have no interest in bank paper whatsoever. I'm only interested in seller finance paper, owner financing, one mom and pop to another, as I like to say. So, if this is your first time here, you're listening after the fact, please go over and subscribe at notequeen.com. And if you want to join our free community called the Citizens of the Realm, you can do so. And that is where the full replays of these hour-long masterminds live. Okay, as well as I put some tips in there, and eventually we'll probably get some. We're kind of new, so we haven't really got a lot of dialogue going in there yet, but it'll come online little by little as we get used to each other and all that. So, and there are some freebies in there for you if you want to go over and check it out. Citizensoftherealm.com. So today, before we get started, does anyone have anything that they're going to want to talk about today? Any particular questions, a scenario you're dealing with?
Hi, Don. This is Sri. How are you?
Oh, hey, Shri.
I have a question, if I may
Yeah,
ask.
yeah.
Um, we recently bought a bunch of uh, reverse mortgages, wherein these are directly purchased from HUD. We are one of HUD's approved buyers. Um, 21 mortgages to be exact, where the borrowers have passed away. And so one of the property after the borrower has passed away, the son, I guess, was cooking something in the kitchen and he burned down the whole property,
Yeah.
um, or 75% of the property. So the property fixed up is probably worth about 550. The payoff doesn't matter because the payoff is most of the time much higher than what the property is worth in reverse mortgages.
Right.
Since the property burned down, as his value is about 120, I bought the loan for about 60 grand. Um, so Hard is telling me that there are two options. They did not file the claim. It was covered under the insurance when the property got burned down. They said the insurance, I can claim the insurance, but I don't know the process of actually how you claim for the insurance as a lender. Have you ever done that, or anyone on the call has done that?
I personally have never had to do that. So basically, just reiterating in case people didn't hear, you just bought a portfolio of 21 reverse mortgages from HUD, and the as is value after the burn down, it was one.
Just one property. The rest of them are fine. Just
Right,
one
right. Yeah,
property. Yeah.
this one property, you before you bought it, it burned down, right?
Yes.
Yeah,
Yes.
yeah. Yeah, so just for people to be, like, hey, what is Sri doing here? So it's worth 120 as is, probably land value or
Yeah.
whatever, right?
Land value.
And you bought it for 50 cents on the dollar, 60
Yep.
grand. So then you're
Yep.
going, how do I get the insurance money to rebuild this place? I actually don't know, Sri. I've never had to do that. Do you know who was the insurer?
I'd look in the documents. I'm still waiting for the collateral package because I just closed it
Yeah,
10 days back. I didn't get the collateral package yet.
it seems to me that all you got to do is just reach out to them and prove that you're the lost payee mortgagee.
Hmm.
I'm sure HUD would work with you on that because they're probably named.
Yeah.
But I can't imagine it being a lot harder than that. Is like, oh,
Okay.
just prove that you belong in chain of title. That's what I would do. And
Can you hear me?
oh, who? Yeah. Jack?
Okay,
Yeah.
this is Jack. Hi,
Hey,
Ashley. Um, Question: did you say it burned down before you bought it or after you bought the note? After
Before I
you.
bought the note. So,
Okay.
the sequence of events is the loan was originated in 2009. Um, the 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 main borrower, I guess, passed away in 2019. The wife passed away in 2023, and that's when you know HUD generally waits. What they do is they look for if the property taxes and insurance are delinquent. So the property taxes were delinquent, and HUD uh, put in lender-placed insurance or force-placed insurance, and bought their own insurance policy. So it takes a while for them to actually start the foreclosure process or sell the note. In the meantime, son still had access to the property. He was cooking or something. This is hearsay from the neighbors, but 75% of the property completely burned down. HUD had a different valuation. Now they have a different valuation. So, but the property burnt in 2024. I bought the note 10 days back. So, knowing very well that the property is burned down, and I got the land value appraised at 120, so I was able to buy it at 60. So HUD said that I'm eligible to actually file a claim for the insurance company, but as a lender, I've never done it before.
yeah.
And HUD had the forced place insurance on it?
Yes.
I'm surprised actually that they didn't claim it.
Well, it's
Yeah,
whatever their wheelhouse.
yeah, why are they dumping them? Just refresh that. Like, what's their
So
motivation?
what
Why
happens
are they
is,
dumping it for these prices?
yeah. So what happens is they um, sell mortgages in bulk. So this might be. I mean, whenever a borrower passes away, they immediately get first place insurance so that they're covered. It might be oversight on their part because I brought this up after the note was sold, but they will very well know that initially the max claim amount was 425 on the property. So all HUD insurance, HUD notes, reverse mortgages have a max claim amount um, come along with the note when you buy it. So that max claim amount actually transfers to the buyer, whoever is the new lender, right? It's
Mhm.
unlike other mortgages where the insurance ceases to exist once a new lender buys the loan. They have to get their own insurance. I have to get my own insurance, but the property was already burned down before I got the insurance, right?
Right.
Um, why they did not do it, I don't know. But they are dealing with 24. They're trying to sell 2,400, 2,500, 3,600, sometimes a quarter. So when you're selling so many loans, I don't know if they can. It's not like a single investor who has a bunch of mortgages. They can easily keep track of insurance and all of that. This is, we're talking about thousands of properties, thousands
Yeah.
of notes rather.
Yeah, they're just trying to dump a bunch of problems for their own reserve reasons or liquidity reasons, whatever it is, or requirements, I guess, that they have. And they're going to sell it. Someone can take a big bunch off their hands, and then it filters down to smaller investors, right? Uh,
Yes.
Relatively smaller groups like yourself.
Yeah.
And you have a group of investors too. Your phone number I see is up. So for anyone who wants to call you. Um, but yeah, that interesting HUD thing. Anyway, I'd love to hear if it doesn't go that way, but
Mhm.
um, yeah, please return and report. But it seems like it should be relatively simple. I don't know
Okay.
how long it would take, but
Yeah.
yeah, I had a really I was telling you about this since it's relevant to I was asking Sheree like a week ago. I said because it's really weird with these reverse mortgages. I remember when my mom died in 2018, January, we were we just barely finished the funeral and we're trying to clean out the house, and she hadn't even been dead for a whole month yet. And they'd have these guys come over snooping around to see what the assets like. And I go, you know what? You can get out of here right now. This is just
So did it have a reverse mortgage or what did
yeah,
it?
my mom did when she
Okay.
had a reverse mortgage, and they were like dogs on that. They were just on it right away. Like, okay, what's the condition of the property? My brother let him in the house, and the dude's all snooping around. And of course, we're in grief mode still. And I was just like, out. out. Let's go
Yeah,
walk
yeah,
outside.
yeah.
Get out of here. Look, before you guys can turn around, I'm going to have this thing sold. So don't worry. Just go away right now, please. It was really, but in this case where someone brought me a deal where the person died in 2013, right? So
Mhm.
they should have taken the property back like right away. But
Yeah.
in 2018, 5 years later, they still hadn't done it. So the son just says, I need to get and anyway, I need to get a little bit of money out. I can't do anything. I'm living somewhere else now. I'm not even in the state. And so I gave him, I don't know. I think I gave him 5,000. It was too much. I should have paid one or two. What I should have done is negotiate to buy the note right then from HUD, but I didn't. And the person that was my eyes and boots on the ground didn't see the glaring notice on the front door and tell me about it. So I just thought, maybe this is one's just falling through the cracks. We'll just take a swing at it. And we've had it rented since the end of 2018 till now. But I recently, someone called me saying, we're fishing game. Do you know that there's people living in this house? And I'm like, you are not fishing game. You're an asset manager. So I'm wondering if the gig's going to be up. We're just riding along on a 25% cash on cash return for as long as it lasts. We got all our money back out a few years
Yeah.
ago.
I'm really surprised that in
Think of
your
that. Think of that. 13 years since the person died.
yeah,
13
that's generally how long it takes. At least more than a year. I'm surprised that in your case they came about just in a month after your mom passed, because they generally don't know until either the insurance has lapsed or the tax are not being paid. Until then, they won't even know. So I don't know how they got to know within.
They must have really wanted the property. That's all I can say. It's like it was by that time near $1 million property. I don't
I
know.
guess.
They were on it and I was not happy. It's not I'm sure it's a tough job that they have to do. But yeah, he didn't get like cookies and milk or anything when he walked in. So anyhow, that's very interesting. And Shri, and I had heard, but you had told me that there's no statute of limitations on reverse mortgages. So if that would have been the case, I could have just do a quick quiet title action and just remove them. But apparently it doesn't work that way with reverse
Yeah.
mortgages. So no statute of limitations. Very interesting.
Statute of limitations only depend on the state. Only thing it might apply is if they have actually accelerated the loan and did nothing, and from the acceleration date, certain years might have passed, and
Oh,
then maybe statute of limitation would come into picture. But if they have not accelerated in a reverse mortgage, I
yeah.
don't think that actually really applies.
Yeah, it seems like they can sleep for as long as they want, but once they wake up and start something, if they don't finish it, that's where you're going. Maybe you have
Yeah,
something to stand on.
because if you look at the mortgage or deed of trust, it clearly states that what the violations are, and
Mhm.
they can clearly, when the note would be called due, or what the violations are, right? So
Mhm.
if they say that we didn't know about the borrower's death because there's no P&I payments, right?
Yeah.
So we didn't know about borrower's death, and they can just use that reason for not triggering the SOL.
Yeah, very interesting. Curious, I learn stuff all the time, lots of times by doing it and doing it maybe not the right way. Then I learn.
Yeah,
Then I learn. And
at least you got the cash flow for so many
yeah,
years. So
yeah, it's worked out all right so far. But anyway, well, thanks for bringing that up and yeah, do keep me posted on that. Is that it for now, Sri?
that should be it. Thanks, Don.
All right, thank you. Appreciate you participating. Before we get too far into it, I just wanted to go over and am I screen sharing? Not yet. Okay. There's just a lot happening in the market, in the world, right? And it's not going away, anytime soon. It's not like, oh, it's going to be calm next month. So this was an interesting, I don't know if you guys took a look at it. I follow Adam Taggart of Thoughtful Money. I love his channel. I also been following Melody Wright since he first had her on, which kind of gave her publicity start really. She does put out a Substack. I subscribe to that. She's very been in the secondary market from the institutional side, did all this work during the great financial crash, the GFC 2008, and all these workouts. And her story is interesting to me because, she comes from the institutional side, and she thought they were doing so many positive things and helping homeowners and helping the servicers and the lenders survive just the big, big mess in the years following 2008. But at the end of the day, she describes being very disillusioned and going, I think I was fighting for the wrong team. Like, she really isn't, but still a lot of her clients are institutional, banking institutions. So she's kind of straddling. And then I watched her discover the private note market that we were just talking about. She's like, what is this shadow market, where it leaves the institutional realm, it leaves where NAR isn't tracking all the sales and the activity. So she discovered, I think, the DME, the Distressed Mortgage Expo that Nathan Turner runs, and I'm not sure if Dave puts, anyway, they put on this convention, and she found them, and she's like, aha, here's where a bunch of notes are going. And then she got wind just recently, not, within the last year or so, about the whole subject to thing and, the Pace Morby stuff. And she says, I'm blowing the whistle on this whole thing. I mean, already the vendors or the servicers that are really on to the subject to, and subject to meaning if you sell a property or you buy a property subject to, you're buying a property, then the seller's loan stays in place. It doesn't get paid off, and you don't assume it. It's just kind of like you just quietly take it over. That's what subject to means. But anyway, there's a clause in almost all institutional loans where the due on sale clause, if the title to the property changes, they have the right to accelerate the loan or call it due, right? And usually, historically, that happens maybe 1 or 2% of the time. But in recent months, I think Mr. Cooper and Rocket Mortgage, I believe, have gotten really savvy to this, and they're actively looking for these subject to transactions to call the loans due. Okay. But the other lenders, other servicers really haven't caught on to it. And Melody, it's kind of funny. She's in one way, she was very disillusioned with the traditional institutional mortgage market. But then at the same time, she's trying to protect them from like people just trying to get out of a tight situation. I know there's a lot of abuse with the subject to, and I have a lot of problems with the way that some things go down. But in some situations, it's like the only way that a solution can actually get done. And so she's blowing the whistle hard, on subject to trying to wake up the lenders. And with AI stuff coming online all the time, I think it will increasingly be accessible for the banks to get a lot more aggressive about looking for these subject to deals. That's just kind of a side note, but what I wanted to say is it's so hard to figure out what's going on in the market. But she is so deep in the numbers, like it actually makes my head hurt trying to read her articles sometimes, where it's just like, whoa, it's a lot of data. But she thinks prices are going to slowly grind down. And in some areas, it's pretty hard hit. And that just puts whenever I see things like this, or what was this other one I was going to bring? This biggest buyer discounts in 12 years. The market froze, but the distress didn't. And they're making the argument, hey, there's a lot of people that were just hanging by their eyelashes waiting for, hey, we're going to have rate reductions. The prices will come back. It's not working. When rates fell to 6%, 6.02, the buyers didn't come back in droves. So basically it's like so those sellers that were just barely hanging on, they're not getting relief. And so at some point they're going to have to sell. And that's when prices, rents, and different things are going down. So the average buyer is now receiving 3.5 or 3.8% discount off of list price, translating to roughly $16,000 on a medium priced home. Seller negotiations pushing discounts as high as $32,000, and that's just in the regular, retail market. Banks are holding $1 billion in seriously delinquent multifamily loans. Credit tightening, pending home sales hit record low as demand refuses to recover. Job revision signal deeper distress ahead for commercial real estate. Zombie foreclosures stay low, but distress pipeline remains active. So basically, so just between these two things, this newsletter that I get and, that I follow her and Adam in his work quite a bit, it's like, what if? Now we know that there could be appreciation, like real estate's a hard asset, and in a way they'll always long-term have value, but we could have another correction. So I just feel like all these things are a perfect storm for these alternative seller financing, whether you're buying or selling. If you're trying to, basically, for one, if you think that you have to sell, you're going to need to want or have to sell anytime in the next 1 or 2 years, freaking just get it done. Don't wait around, right? Because once it starts rolling down, it's really hard. You have a first mover advantage of trying to sell. And if you do need to sell, don't be stupid on price. Come out the gate 5% below what you think it'll sell for and get the bidding war going on. But if you can hang on for however long, who cares? Because it's always going to produce some sort of rent. People don't get tired of living in houses, except for my daughter, who doesn't like living in houses. They bought a house and they sleep outside as much as they can. It's like I bought her shoes and she wouldn't wear them to high school. So anyway, some people are like that, but most people don't get tired of living in houses. But anyway, if there's a ton of competition and nobody's moving, you're either gonna have to drop the price or you're gonna have to offer terms or some combination of the two, right? So most people only have their one-trick ponies. The realtor goes, okay, time for another price reduction, time for another price reduction. Now, owner financing is not for everyone, but there's a lot of situations where it would work and would be a great solution for both seller and buyer to get the deal done, to get a good price for the property, to sell quickly. A buyer who's really qualified, has a big down payment, can afford it, but just can't, maybe they're self-employed. There's a big bunch of people who are self-employed that have trouble getting traditional financing. So that's a perfect match. Lots of times landlords selling to their tenants, that's a perfect match, right? If the underwriting makes sense, or you just go in with your eyes wide open. Even if you decide to do a bad job of underwriting, like take 0% down or something, it's fine. But as long as you go out with eyes wide open, if you ever need to sell this note, just know that you're not going to get top dollar, and here's why. And if you still decide to do it, great. You've been advised. There's nothing that's wrong about any which way to do it, but just understand so that you're not so disillusioned and broadsided by someone offering you 50 cents on the dollar or 30, or no one will buy it at all because of you made some strategic errors in the deal structure, the paperwork, etc. So when I see these signs of stress, it's a little alarming. Of course, I own real estate and I want it to be worth as much, but the market, when the traditional Wall Street banking thing starts to break down, this is when what we know how to do here in rooms like these becomes so critically important, because we, in the creative real estate space and seller financing, and especially that note buying piece that a lot of people don't understand, that's what we can make the world go round without Wall Street, without the institutional banks. We can do it on a private basis. So that's why I get really excited. In fact, I was talking to some guys that have a big company over in Texas, and they're doing a lot of this seller financing subject to. And then, of course, one of their main things is being able to refinance that buyer in 2 or 3 years, so that they're getting deals done, and then they're filling their pipeline of refinances. And then not only do they run a big business doing that, but they the guy I was talking to him, and he's like, oh yeah, and I do my own bunch of real estate, we buy houses kind of thing. He goes, I run a big business with that. And so he's very knowledgeable. They're even pitching this subject to owner financing kind of stuff all the time. And he doesn't know the first thing about the note business, the secondary market for notes. And I said, guess what? We could collaborate, because so this is a guy that's been doing, these are big operators, and they don't understand the secondary market for note. They understand, oh, I can buy with owner financing, and that's great. But they don't even think the next step of, well, then that's a paper investment. That's an option on a note. There's all these juicy things that, professionals and even the most, big time real estate investors, they just don't get the memo somehow. And so they're leaving so much money on the table because they don't understand the secondary market for notes and the hidden opportunities that are just so juicy when you buy with owner financing. And also, when you sell with owner financing, you get to defer capital gains, have income for retirement that greatly exceeds your net rent generally, and you leave a great inheritance. So anyway, to me, there's a perfect storm coming up if we do have some times. Thank you for engaging with my content. If you'd like to hear the rest of the replay, please go over to citizensoftherealm.com and join our free community. If you'd like to participate live, be sure to subscribe at notequeen.com. And if you have a situation where you could use some one-on-one help, check out notequeendeepdive.com and schedule a private consultation. I guarantee that 1 hour with me will either make or save you thousands. Take this information and go out there and create financial solutions, just one mom and pop to another. See you next time. Take care, everybody.